What's up, everybody? This is Lamine from InvestingSimplified.net. Today is Sunday, June 13th, 2021. Today, we will take the opportunity to look at metals. This is GLD daily time scale. As we can see, metal has been in a downtrend for quite some time. We recently broke out of this downtrend. As we can see here, this peak back in August of last year compared to this peak, the third time market went through. Market started to consolidate for the past few weeks right above this breakout level. And this is very normal because if you look at RSI indicated to us that market is getting overextended, which means it is due for a rest or a pullback, which is exactly what it's doing. Short-term traders might be booking their profit here. Some longer-term traders might start to build some positions here. So we think between the 50-day moving average, 170.5, to this 175.74, the highest volume profile zone, we believe this is going to be a tug of war between bulls and bears, because those who purchase GLD at the very lows around here, it would not be a bad idea to start booking profits here while market digests this prior move. Those who miss this run, this will be a second chance opportunity for them to reload on metals, because we think since the trend has shifted to the upside, once GLD find a strong low, it will be an opportunity to send this even higher. This prior high, we should expect that to be tested, and the upper end of this volume profile level. Once those two zones get taken out, we should expect GLD to come to 194, the prior high. Remains to be seen. We'll continue to monitor. We are paying attention to this prior support level that acted as a resistance here, and the market broke out of recently. We will not be surprised to see market back test. This white line is the 200-day moving average, and the yellow line is the 50-day moving average. So this 5-point spread here between the highest volume profile and the 50-day, we think GLD should find support. How long that's going to take remains to be seen. Nobody knows, and nobody can predict exactly when the lows will be in. But once we see the lows, based on our internal models, we will be able to identify if the lows are in, and eventually update our viewers. Let's jump to silver. Looking at daily time scale of silver, this is a 2-year history. As we can see, silver has been trading between 28 and 20 since we had this parabolic move. Market stall or peaked back in August of last year. It has been chopped between 20 and 28. As you can see, we are at the upper end of the volume profile level, and we are trying to break out. Once we get a resolution of this trading range, a strong break above this 28 level, we think silver is on its way to 36 to potentially 40. What we are monitoring right now, we're keeping our eye on the dollar index and the 10-year note, because the yields and the dollar index will tell us which way metals eventually will go. On Friday, we had a strong rebound in the dollar index, although the yields were down. Both gold and silver pulled back a little bit. This pullback in gold made clear sense to us because gold market is a bit more extended compared to silver. The correction in gold, totally normal, as we already discussed in the GLD chart. So the most important thing is to keep an eye on the dollar index and the yields, because whichever direction those two asset class wants to go will determine how deep the correction in gold and silver will be, or how minor it is going to be. If the dollar break out above the 90.5 and start to move towards 91, 92, we think that's going to put some kind of negative pressure on the metals. So that's what we are watching, and we'll update our viewers as new development comes. The indicators, RSI, really not overboard, so we're really not taking much out of here. Momentum is to the downside as well, but it's slowing down compared to GLD chart, as we can see here. And we are at the upper end of the volume profile level. Any break above the prior highs will indicate us that momentum is shifting and silver should continue to push higher. So with that, we hope you enjoyed this video. If you do, please give us a like, hit that notification button and subscribe. We will see you in the next video. Bye for now.